Monday, December 2nd, 2024, last month of the year. Market analysis, Stan Ehrlich had a great Thanksgiving. Hope you guys did as well. A little tryptophan hangover. But we have a strong bull market. We are in the process of making new highs, or looks like we're about to make in some cases. The E-mini daily data chart, new high ground. But it is critically important that the markets stay above previous rally highs where it is at the moment or higher in order to have more upside follow through. If we close below Friday's high today, that is not particularly good. That is a failure to hold strength, potential loss of momentum, a variety of little sell signals, and could lead to a bit of a break. Not happening. We're up, we're strong, we're in new high ground, and it looks like it could stay that way. 1 minute chart on the E-mini. Got a lot of vibration up here, but it managed to make new highs again and is still relatively close. At the moment, I don't see anything that's going to cause it to break down. I do expect a break, but not quite yet, and I'll scream bloody murder when I see it, like I usually do. Next, SPY, new high, as you would expect. Strong, a relatively light volume day. Not a lot of price range. Still bullish, looking for higher levels. But I've got to warn you, we are extremely close to being overbought. On the E-mini, 71.5. On the Spider, 73.90. And of course, over 75 is overbought. And usually, like before, a few weeks ago, leads to some sort of a downside correction that could be a lot more profound than just a few days. So there's still gaps to close at lower levels in the Spider, not to forget about those. Maybe it'll be a downside objective. Next chart, Spider 1 minute, climbing. Look at the QQQ. We are barely making new highs for the whole trend. We're still up there. We're still holding. The 1 minute chart is just recently, a few minutes ago, made the higher highs. No sign of it turning around quite yet. Back to the daily. There might be a very teeny weeny gap to close between today's low and Friday's high, but minor. I don't see it yet. RSI 70.38, not 75 or higher. Last time we were up there, we did get a sell signal, and it did work great for 4 or 5 days. And we had some great short sale trades. Now, we could do it again, but I need overbought again, and it's not there yet. So new highs, expecting strength, short term, next few days, maybe this week. So QQQ 1 minute, still there. Let's look at the NASDAQ NQ. The market is still almost a new high ground, very strong day. We're not overbought. We could see another day or two like this, and a follow through. I like it. I mean, I don't want to talk too much bearish here. I see the warning signs when they develop, and they just not quite there yet. So, looking for more strength. NQ, looking for a new high for the trend. Trend lines holding. No bearish formation yet. I know you could see a double top. You could see some other kind of toppy formation, but it really isn't starting yet. The 1 minute chart, looking pretty good. Okay, the YM, well into new high ground and very overbought for the last few days. Now, this is a little bit different story. We are in a doji. We have basically matched Friday's lows, and there's no bearish engulfing, so we don't have a red bearish engulfing ER sell signal. If today and or could have been Friday as well, and even for that matter, Thursday, interesting, this was trading, well, in this case, not on Thanksgiving, but some markets did. New York's weird. First time I've seen that in half a century. So the only constant has changed itself, and now we're seeing markets start to trade on some major holidays. All right, so overbought, warning sign, not a reversal yet, but I wouldn't go buying this. I don't like buying into overbought conditions. Usually you're going to end up buying a rally high. So looking for a correction, don't see the signals quite yet, but some of it. And the 1 minute chart on the YM. Rally didn't hold. Big flip flop. And now a little bit lower than Friday's lows, but not lower than Thursday, for example. And looks like maybe even Wednesday. Yep. Toward last week. So maybe we are going to start to slip a little bit more on the YM. What about the Russell? It stopped cold turkey at on 1125, the beginning of last week, after an up gap into overbought condition and touched the top of a major historical multi-year resistance level. Bullseye. Pulled back, closed the gap on Tuesday, tried to make new highs Wednesday, Thursday, and today slipping back down. So we're looking at, that's not trading on Thanksgiving, the 27th, 6th, yes, and not the 28th, 27th, 20th. Okay. So we have a minor new low for a few days, but not serious yet. I think we're going to see more weakness here. And it could be a prelude to the other indexes turning down, but I don't see it yet, like I do in the YM and the Russell to some degree. And you're looking at the 1 minute chart. So bonds, yippee-ki-yay. This is doing great. This is one interest rate futures, bonds and notes, have been one of my biggest calls so far for the last few months. I caught the head and shoulder top. We caught the downside breakout. We got down to its minimum downside objectives just fine. We got oversold. We had a little bounce. We dropped into new low ground. I got a buy signal, but it wasn't the lowest low. Now we're trading higher than that price level, but still it made a new low after the buy signal, which means you got stopped out with a loss. But these signals are not necessarily the lowest low or highest high for the trends. They are sometimes part of the bottoming and topping out process. So it did. Now I can say minor double bottom. But the more important thing here is the big 2-year head and shoulder bottom formation, and it's a double shoulder. Back with a little tiny double bottom in October 22, you got your first shoulder low. Excuse me. You got the March 23 bottom second shoulder. Okay, all the way down to the bottom of the market, October again of 23. Got a buy signal smack dab on the low day, had a gigantic great trade out of that signal. Didn't completely get to its upside objective. Oh, wait, that's not the case. This is just a measuring stick to show you how high the big pattern could get, should get, I hope will get. The next inside shoulder is April 25 of 24 this year. And the second and last shoulder has just, in my opinion, been finished last week. Rallied almost every single day, I think it did. Made new highs for a month plus. Now, for the last couple of days, we've gotten a little bit overbought and deserve a little bit of a move down, but that can't be very large, and it shouldn't last very long, and we should see new highs, within a few days to a week, or maybe two, and keep going up like that for the rest of the year, and I think well into January and probably February. Now, when it gets to, if it gets to 126.5-ish in January, February, that's the neckline on a gigantic 2-year head and shoulder bottom with a minimum upside objective of approximately 150. Huge, major bull market, long term. We have finished the last shoulder on a double shoulder 2-year Head and shoulder bottom, in my opinion. Huge elbow room, long-term investor type stuff. We'll see how it acts. Now, I can say almost exactly the same thing. Oh, there's one more point I want to make. The lows that we made during November 7th through November 18th were right smack dab on this dashed cyan light blue line, which is the neckline of a single shoulder, head and shoulder bottom. Now I'm counting only March of 23, October of 24, and the low made in April of 24 as the shoulder, head, and shoulder. When you broke the neckline here, July of this year, you came down, tested it, ran up nicely, came back down to the neckline again in the last couple of weeks and ran up, which was the last shoulder on a double shoulder pattern. I haven't seen one of these in decades. It's really a whopper of a combination of patterns here. I would have to say very, very rare. So far, so good. Notes, almost exactly the same story as you might expect, but not necessarily. But look, you've got the shoulders, you've got the timing is the same, you've got the pattern. The last shoulder, first inside shoulder here is not quite the same as Bond's, but very similar. You've got your test of the single shoulder neckline. You've got the neckline for the double shoulder pattern. Its upside objective is 126. This should last many, many months. Let's see how it goes long term. Okay, crude. I think we're going to test the support area again. Rallies have failed, short, intermediate term. Got a great sell signal on the high of the move back toward a bearish trend line. This has been a huge sideways trading range, but there are a variety of bearish implications involved. We have to break below 66.5 and especially 63.5 to continue a bear move of substantial amount. Next, heating oil. Pretty much the same story, but more obvious. You've got the lower lows over a significant amount of time. You've got the rallies that have failed. You've got the sell signals. You just are momentarily testing a little support. I think it's going to break down. Looks to be bearish long term, still involved in a long term downward slanting channel. Next, natural gas topped out on November 22, just before Thanksgiving week. Our sell signal has worked fantastically. Here's the ER3, the next day short, never closed with a loss. Next day went up a little, but still lower than where we got short. Next day was November 27th, huge down day. That's the day that makes the trade. A couple of days with a bounce, new lows today for the trend down, for the move down. Trend line, STS smart trailing stop, the yellow line here. Now locking in a very nice profit. I probably will change the stop to make it go down a little quicker. I'm not going to do it yet. I'll tell you when I do. But there is flexibility with this strategy to make it move kind of the way you would like. A little faster, a little slower, but the basics you cannot change. And that is the signals and the entries, only really how quickly your stop can move. And I do not particularly encourage that unless you're used to the way the system works. Next chart, gold. Now, gold, silver, and platinum may be building a head and shoulder top with a significantly downward slanted neckline. And in all three cases, I've got a yellow dotted line here. I'm a little hesitant to talk about it, but the body parts are there. You got your shoulder, you got the head of the formation, you got your last shoulder high, bearish engulfing, huge. Unfortunately, not quite overbought. That would have been a great ER sell signal. Excuse me, but didn't happen. So, looking for a low lower than 26.27 this week. Looking for a test of the neckline, which is way down here and dropping quickly every day. So as time passes, the downside objective will get a little lower and a little lower and a little lower day by day. So it's quite substantially bearish with these downward slanted necklines on head and shoulder tops, especially this angle. That's one of the reasons I'm a little skeptical about talking about this. But again, I don't see anything wrong yet. I'm bearish all the way down to 2,300 and maybe more. Let's see how this top progresses. Now, here's silver. You've got basically the same thing. The neckline is not quite as downward slanted. And you may have noticed I've got 1 year of data from December of last year to this December loaded on the gold. I've got the same amount of data, so the angles are okay. And it's downward slanted, but we're not that far away for the neckline in silver. Downside objective 25. Everything else I said before basically still stands. And guess what? Platinum has the same thing. Already tested the neckline, bounced a little. I'm looking for a break. It's going to break below support at the same time. Downside objective here I haven't measured yet, so here it comes. This is the depth of the formation, and you grab that measuring stick, that's what I like to call it, and you call it a downside objective of about 800. That's the nearby platinum contract over the next, I don't know, 2-3 months. Remember, bear markets move down faster than bull markets go up. But we got the top of the market in platinum. Unfortunately, not in silver. And we came close in gold, but that doesn't count. Yes, we got the highest high, the head of the formation in platinum. Next, copper, not quite the same. Major support is being tested. I think we're going to see lower lows. We're not oversold. So I think we're going to see lower lows. Now we are still short copper from the high day, September 30th, all through October, all through November, and now in December, we're still short. This trade is a whopper. We're almost making new lows completely, not quite. Looking for lower levels. Don't have a downside objective at the moment. What about soybeans, oil, meal, corn, wheat? Okay. I have been trying to justify a bullish long-term opinion on grains in general. It died a couple of weeks ago. Now I have to be neutral to bearish, basically bearish, intermediate, long-term, and short-term, because support really isn't holding well. Now, beans tested support very accurately today. It's been hammering away at this. Looks to me like it's going to get broken. We're going to close below 974.5. We're heading south big time real fast. Not oversold, not even close at the moment. That could happen today. I think it's going to happen this week. Sell signaled about 2 weeks ago. We're still short. There's your little green trade line. I'm loving it. There's our trailing stop. Maybe I'll lower that a little. That's it. Looking for a lot lower. Next, soybean oil. Recently, new lows, got oversold, bounced a little bit, dropping off again. Looking for lower lows. I think we're going to test 38.68 and probably get down to 37.30 and break it. We're short from the top of the market, the sell signal on the high day, November 11th. We were stopped out of that trade, but it is a sell signal on the high day, which is great. Looking for lower levels. Now, because we're at support, and there's a slim chance that this could develop into a big, broad head and shoulder bottom, I can't pass on commenting about that. But we're at the shoulder low, and I doubt it. Nothing else particularly supports that expectation in grains. Soybean meal, long-term support, long-term possible double bottom. I don't think it's going to do it. I think we're going to break 286 and start to trend lower in a more aggressive way, maybe this week. It looks like today is kind of like the start of it. New lows for a couple of weeks, almost new lows for months, many months. Bearish. Next, corn looking a little bit better, bottom formation, but it should have broke out to the upside a couple of weeks ago when it had the chance. Instead, it came all the way back down and is building the shoulder that's too wide to the right, which shouldn't have happened. I think it's going to die here. And if it starts to close below 425, I'm going to start to erase my markers for the shoulders and for the head of the formation because it'll just be too much sideways and too much weakness. But for the moment, I could have maybe bought the last shoulder low. And there's the neckline. And if this all goes straight up from here, which I doubt, it'll get 493. But I'm thinking it's not going to happen. Next, wheat, broad double bottom, maybe. But we're at the lows right now today. Made a minor new low. Other than being oversold and at support, which is a couple of great combinations I like, it's friendly. We might have a bullish engulfing if we can manage to get above Friday's high, because we were one tick lower today than Friday's low. But it doesn't look like it would happen. But if it does, this will turn green. We got a bullish engulfing on the other low, exactly. That'll be great. But let's see it happen first. So maybe a broad double bottom, but don't jump the gun here. If you bought, you probably should have a stop somewhere around the very, very low 40s, 541, 240, 39 would be my best guess. Previous bottom 39, so probably 38. Next chart. Looking at cattle. Bearish engulfing today, not overbought, so we're not getting a red signal. But I like bearish engulfings at a resistance area, very close to overbought a few days ago, and it stopped rallying. So I'm looking for a test of 184. We are still, I have to add, long. From the bottom here on November 15th. So I think we're going to raise my stop. I haven't moved it yet. Probably right underneath these lows, and probably real soon, like today. I shouldn't have let this thing go flat, but then I got, out of town. I wasn't able to change it. Next. Hogs. Overbought condition Thursday, Wednesday. Well, okay. Yep, that's Friday, sorry. And no, that would be Tuesday, Wednesday, sorry. At a resistance line. Broke it, but couldn't stay above it in new high ground. I told you. Once you make new highs, stay up there. If you don't, especially if you close lower, which this did, then you're probably going to get a downside move. And it did on Friday. Now we're bouncing back. No trend change yet, but I think we're going to start to see more weakness. Back to the support area, 82 3/4. That's my best educated guess here. SQ, I've been tracking. A friend of mine clued me into this. It's a stock. Now, I rarely talk about specific stocks, but look at the support long term. Unbelievably good. Broken twice, major bottoms in both cases so far. Now, today, another new high for the rally, and after a significant breakout, not quite overbought yet. I like what I see, but there's a gap. So we might come down to 89.77 again to close the gap. I like what I see. I'm bullish. I'm looking for a lot higher levels. In fact, this 2-year trading range base says we're supposed to have a minimum move up to 134. But that, when you look at the longer term picture, is a very minor upside objective. This could easily get up to, let me rescale. Oh, I'm thinking 150 and not ruling out 190 and higher. That's huge. The pattern says minimum 134. Having some trouble with some New York markets, so I'm going to skip it. E-mini still holding 9.25 higher. Don't see anything bearish yet. Have a great day. Talk to you tomorrow. Profitable trading to you.